Time now for Phil's Gang Market Watch with Phil Grande.
You know, we're on watch for Spain, on watch for Italy, and all of them, Portugal, but they don't mean anything to me because I'm a chartist. I trade technicals. The one thing I do know, that the market is totally disconnected from the companies. If anyone wants to tell you that because of these earnings, the stock market has been going up because of these terrific earnings, it's a bunch of nonsense. The stock market has been going up because the Treasury, the Federal Reserve, has been printing money and going to the bond market and outbid everybody, so that if someone walks in the door and has $400 billion to buy treasuries, they get outbid by Bernanke. He buys them all to force them to take the money and go into the stock market and rally the stock market. Now remember, we had QE1, QE2, and now they're talking about QE3. Now remember, QE1, all they did with QE1 is turn around and they bought all the mortgages, all the off-balance sheet illiquid stuff from the banks to give them cash, so they would go out and they would start lending to you, start lending to businesses, to homeowners. But guess what? They didn't. They hoarded the cash and they speculated with the cash. So that didn't work out very well, QE1. It did for the stock market, but not for the economy. The stock market exploded on QE1 because, once again, no money went to the Main Street, it went to speculating in stocks. Then they decided, let's do QE2, because when QE1 was finished, there was a hesitation for about 4 weeks and the stock market started to pull back again. QE2, they said, well, this time we're going to do something different. This time we're going to turn around and instead of go and buy the assets from these banks and give them cash, we're not going to deal with the banks. What we're going to do is we're going to go to these bond markets and we're going to go and buy every 10-year bond we can find. So when somebody came in from Italy or someone came in from wherever with $400 billion to buy 10-year treasuries, well, there's Bernanke outbidding them. That forced all these people who are sitting there with billions in their hands to do one thing. They weren't going to get a Christmas club. They decided to go, we got to buy stocks. That's exactly what Bernanke was doing, trying to force them into buying stocks to rally the market. And we had another big rally. Well, of course, we wanted to do QE3, but everybody was against it because they said we can't keep doing this over and over and over. So what we finally decided to do is put a twist into it. So they call it a twist. What's the twist? Well, this time, instead of borrowing money, printing money to go and buy bonds or go and buy the assets from these banks, they decided to sell the 5-year treasuries and with that cash go buy the 10 years. But it still was QE3. Now, once that stopped, the market started to pull back again. And we've experienced since May almost a 15% correction. That's why QE3 is definite. Because if you go look on a chart, a stock chart, look at QE1, QE2, and the twist, every time they stopped, we started to pull back. So you can be assured, going into November, you can be assured Bernanke can say what he wants, Obama can say what he says, that no, Bernanke's not influenced by politics, and Bernanke can say the same thing as a big bold-faced lie. Bernanke is going to do QE3, which brings me to the point that every one of these QE1s, QE2, the twist, we've been making money. Now, please understand, don't listen to CNBC and all these shows that tell you the market's going up because of great earnings. That's not true. Okay? The earnings aren't great. They're low-quality earnings. Why? Because the earnings, they've got the earnings by firing everybody. Pretty simple. Anybody could make money. You just fire everybody. And any businessman will tell you that. And you don't expand. You don't buy equipment. And it's just like having a home and you don't maintain it for 2 years. You look in your checking account, boy, I got a lot of money, but now your house is falling apart. Same way with these companies. They're not expanding. They're not going getting new market share. They're not staying up with their IT equipment. That's all going to hurt down the road. So I feel that this is the time with this latest pullback is to start buying good quality stocks, not based on what the company does. When I say quality, quality patterns, good solid patterns. And that's what we do. That's what chartists do. We recognize these patterns, we execute these patterns, and we've done terrific. In fact, if you take all the gold mining stocks and silver mining stocks that we bought since May, we're up over 20%, and nobody wanted to buy those. Only until we were up 20% did Fast Money come out and suggest buy mining stocks, a little late. So once again, I think we're going to have a big rally. I think we're going to have a great rally going into the November election. I think between now and QE3, it'll be a choppy market. We'll go up and visit the 50-day moving average on the S&P, and we'll pull back. It'll be a little choppy. But I believe by the second week, or at least the fourth week of July, there will be a QE3, or a twist, or whatever name they want to give it. But it will happen. We'll see you on the charts.
For more information on Phil's Gang, please go to philsgang.com or give him a call at 877-600-GANG. That's 877-600-4264.